Okay, so welcome back to this video. And before we get started, again, I want to remind you, right, to complement your candlestick training course. Go down to my website, tradingwithrainer.com, right? You can pause this video or I'll put the link below. And come here and you scroll down to this page and click this blue button here, right? I would like you to get the ultimate guide to price action trading because it will complement whatever you have learned so far. We'll talk about support resistance, market structure, trading strategies, and much more. So just click this button, enter your email address, and I will send the guide to you, right? It's pretty much straightforward. So back to this video. Today we will be discussing on how not to trade candlestick patterns. The first thing is don't trade it in isolation. This is something that I have been grinding to you since I think the first few videos, right? Don't trade it in isolation. Why? Because if you, for example, you see a bullish hammer, you go long, you see a shooting star, you go short, chances are you're not going to make money in the long run because it does not have a statistical edge in the markets. Right, I've studied the works of Joe Marwood, is a friend of mine, and he actually found that candlestick patterns, I would say most of them don't have an edge in the markets. So this is why you don't want to be trading it in isolation. Second thing is that candlestick patterns by and itself is not a trading strategy. So if you think back, right, what is a trading strategy, right? A trading strategy would give you the conditions of your trading setup, right? So maybe I just write this down briefly, right? A trading strategy entails, right, the conditions of your trading setup, right? A set of conditions, maybe, trading with the trend, with the market structure, support resistance, and stuff like that. Then it has to have an entry trigger, right? What is the entry trigger that will get you in the trade? After which it needs to have an exit. How will you, take your profits? Or, what happens if the trade goes against you? Where would you put your stop loss? So exits / stop loss. And then you have what you call a trade management. Or if the trade goes in your favor and then start reversing against you, what will you do? Will you bail out half the position, everything? And something like or something like that. Then you also have risk management, right? How much will you be risking on each trade and stuff like that. So you can see that candlestick pattern is not a trading strategy because candlestick pattern by and itself will not give you all these important elements that a trading strategy requires. If you ask me, right, what it can offer is possibly just the entry trigger and is part of the conditions of a trading strategy. Exit may be, right, that is a possibility as well, but you can see that it definitely will not fulfill, right, these are 5 important elements that you see over here. So candlestick pattern, it is not a trading strategy. And another thing is that don't look at it for trend bias. I know it's a mistake that I used to make is that when I see, let's say for example, a bullish engulfing pattern, right, in my mind it'll start racing. Okay, the market is going higher. I better be long, right, because I don't want to miss the move. But again, right, I think if you studied the earlier videos, I mentioned that it can be misleading because candlestick pattern tells you, momentarily what has happened, right, for the moment. But if you want to get a trend bias, it always pays to look at what the trend is of the market. So for example, you see this this is a chart of dollar Canadian, and you can see that this clearly, I mean any 10-year-old kid will look at this, and I can tell you that the trend is very strong, bearish towards the downside. Okay, and here's the thing, right? If you choose to ignore the trend, the momentum, right, and you just want to look at candlestick patterns to give you a bias, you can see that it can be very painful to trade against it, right? Look at this, right? This is a let's say for example you have this one over here, right? This bullish maybe it's a engulfing or piercing pattern, right? This one is a bullish piercing pattern, a bullish engulfing. You can see that true, these are all bullish reversal patterns, but if you just look at them blindly, you don't look at what is going on, right? What is the trend? It's going to be very painful to trade them, right? So this is another aspect which I want to emphasize, right? Look at the trend. It is your friend, right? The candlestick pattern will not tell you what is the market likely to do. The trend will tell you what the market is likely to do. Okay? So now that you know how not to trade candlestick patterns, here is a quick recap. Number 1, don't trade it in isolation because it does not give you an edge in the markets. Number 2, it is not a trading strategy by and itself because, as I've mentioned earlier, you need many components in a trading strategy, and a candlestick patterns could just maybe act as an entry trigger or a condition, part of the condition of your trading strategy. And lastly, if you want to look at which direction you should be trading long or short, just look at what the trend is. Don't look at your candlestick pattern to tell you whether you should be long or short. Look at the trend. Okay, so if you're wondering, how do I, define the trend and stuff like that? Again, go back to the start of this video. Download the Ultimate Guide to Price Action Trading. Right, I cover a lot more topics like market structure, trend, and stuff like that. So go and download it, and I believe it will really complement to whatever you're learning so far. So with that said, I have come to the end of this video, and I'll see you in the next.